아니야. 되게 유튜브였나?
아, hello guys, welcome back to Roxom TV and also welcome back to Jam Jam Crypto. I'm sorry with the delay, we have a little bit of technical issue, but today is an exciting day because Roxom Exchange is finally live and we have an awesome video to show you. Like, if you guys didn't know about Roxom Exchange and also Roxom TV, I highly doubt that because I have been doing content with the team. Again, it's an amazing team that I'm working with. So right now they have this Bitcoin exchange. So basically the entire exchange pair with BTC. Usually when you go to a crypto exchange or a stock sad, but interestingly, process people got some exchange. You can see all the parity with BTC. So I'm going to show you what it means, but just before we dive into Roxom Exchange, I have an awesome video I really want to show you. It's about 1 minute long, so they have amazing graphic, amazing styling there. So let me show it right now.
Others, bubble boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising. The dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
When I watched that video,
Plenty of spreadsheets. And my quant!
I hate this part.
I was right.
Anyways, as I was talking about the Roxom Exchange fund and we are practically still day 0 or entering day 1. So just bear with us. There are a lot of features that we haven't launched out yet, but I'm just going to show you what the website. So as I was saying, everything going to have BTC. So very interestingly, we're going to see NSCR and BTC, and also all these stocks, all these Bitcoin treasury, BTC, so with stocks, so as ETFs as well. So you're going to see even US bonds for so that's very interesting. At the moment, there aren't a lot of trades, trading pairs being open. We have perpetual, but not really for spot at the moment. But okay, sorry about the glitches down again. Unstable Wi-Fi, but just you see what I mean. So go to Roxom Exchange. Here's the Twitter, but also at Roxom, and go to Roxom and type Roxom.com. Then you're gonna get a hang of how the exchange works. But sees everything paired with BTC. I wouldn't be surprised to see basically all the pairings goes to looks like eventually breaking down to 0. Maybe not so much for gold, because gold right now is chilling and BTC, but that's basically what you're saying. So anyways, do check it out and do try to explore a little bit. This is the first exchange that everything is okay. Anyways, let's also put on to the Bitcoin today. And as I was talking about it yesterday, wake me up when BTC actually breaking out of this general downtrend. And well, if you guys were watching Roxom TV, watching our analysis, I wasn't bearish when we had a market crash down back in last Friday. I was actually bearish at the top, so I'm going to go from 6K. The reason why I put this at top instead, because we are forming this downtrend. Short time frame, so 1 hour chart, an hour chart. We haven't really broken out yet. So yesterday live stream, see Bitcoin back to 111K, really high, saying okay, maybe it's just an correction after all. But what I was saying yesterday live stream is that okay, if we don't manage to break out of this downtrend, then the rest is just noise. Basically waking up when actually breaking out and we test this downtrend as a goal. And looks like TA hasn't failed us after all. We trying to get close to the downtrend and then we got rejected. Right now it's reading at 107K.
So basically the narrative is switching from we are so back, so right here 111K, we are so back, yeah, let's go, and then people are feeling off again with BTC. And let's also go ahead and pull out the VLVP. So VLVP is suggesting, okay, since that we are at 107K, it's actually okay, the most of the volume is kicking in at 106K. So that's the floor, what the VLVP, what the volume is suggesting us. So until then, if we don't have confirmation we're breaking out of this downtrend, then 106K looks like is a flaw to me. Again, we are only on the 1 hour chart. Of course, there's more downward pressure if we lose 107K. Like, we're going to get down to 101K rather quickly if we lose 107K. This is what the shorter time frame is suggesting us. Let's go to the daily chart. Let's see if we can get more idea where the market is going. So again, the general trend from 126K is still valid. So until I see Bitcoin broken out of this level, I think, okay, the bearish momentum still intact. 112K is really a level that we have to break out. So I would say, let me draw the rectangle again. So you guys know I love using that rectangle. So I would say 113 to 112K is a level that we are watching very closely until out of this like downward, and also retest it and get into this trading region, this trading range. Like, I'm not turning bullish, at least on the shorter time frame, at least on the hourly, and also at least on the daily time frame. I'm not turning bullish. So let's also hop onto the weekly, and slowly we're building from shorter time frame to higher time frame. So let me remove all the drawings because it's extremely confusing. All right. As for the weekly, like, it doesn't take a genius to know that we are very bearish at the moment, because what happened from last Friday after Donald Trump was threatening China that we're going to get 100% tariff rate. Because of that tweet, that completely crashed the market. Like, personally, I find that extremely stupid, because we have talked about the 4-year cycle extensively on Roxom TV. So we know if we are a believer when it comes to the 4-year cycle, we know the cycle top going to happen on 6th of October. And it seems like exactly on 6th, we got to 126K. So is the Donald Trump tweet the reason why it triggered this like bearish run? I don't want to call it a bear market, but if we are a strong believer for the 4-year cycle, then maybe we enter a bear market. But okay, I don't want to be so bearish at the moment, because there are still many bullish catalysts. Like, if just one Donald Trump tweet and trigger a bear, I find that extremely stupid. There are many bullish catalysts that I think is enough to push the price higher. So on 29th of October, we know that there's another FOMC meeting. So there are close to 99% of people expecting we're going to get a 25 basis point cut, and a 25 basis point cut in December, so 10th of December. At least that's what people are predicting. So we know rate cuts are on the table. Definitely whoever replaced Jerome Powell in the next term, so in May 2026, that person going to cut rate drastically and really rapid pace as well. So that's one macro we could not ignore. So that's being one. And because of what happened last Friday, because of that market crash, we kind of have a reset when it comes to the leverage. And excessive leverage is always not so healthy for the market. It's kind of a good thing that Donald Trump helped clean that leverage and the market has reset. And let's not forget, we have the 401k coming. So the boomers going to invest in BTC. That's going to unlock billions of dollars. So yeah, go ahead and release the boomers. So that's reason number 3. And reason number 4 is that we now have confirmation from Jerome Powell that QT has ended. Like, that does not mean QE, because QE and QT, they are 2 different concepts, right? So we know QT we're going to come to an end in coming. So that's the bullish catalyst we could not ignore. So just because one tweet from, we are seeing a bear market, I mean, it does not make sense to me. I know narratives follow price. If Bitcoin has to just to go to a bear market because of the 4-year cycle, then seriously, I got nothing to say. But let's also hop onto weekly. So weekly, one thing I noticed that is a little bit bearish. Okay, let me zoom out a little bit. All right, so that is the RSI, the bearish divergence that is forming right here. So let me pull up the trend line. So we are seeing from basically December 2024 till now, we have a bearish divergence on the RSI. So this is since a year ago. And it makes sense that now that we are in Q4, maybe the 4-year cycle is so intact, but like again, because we are looking at the higher time frame, so this could play out in weeks or even in months. That's one thing I noticed, but it's not like too concerning. Again, since today is Tuesday and we have the weekly candle close literally just like 2 days ago, 1 or 2 days ago, and we have broken out of the bull market support band, which is not necessarily a bullish catalyst, I know that, but technically speaking, we are still above the 50-week moving average. So there is still some room. Bitcoin right now is sitting at around 108K. So Bitcoin would have to drop another 5% just to reach the 50-week moving average. Like even though if Bitcoin dips below that, I will still need more confirmation. So if we have a weekly candle actually close below the 50-week moving average, then yeah, things are not looking good. If we have 2 weekly candles below 50-week moving average, I'm selling. I'm so sorry. But like, especially when it comes to altcoins. But at least from a technical standpoint, there isn't a reason for me to be so bearish long term at the very moment. Of course, we are taking things one at a time. Not only this, we are seeing some bearish reason, bearish catalyst for MSTL as well. So if you guys didn't know, MSTL is basically a Bitcoin proxy company. So if we look at the weekly candles, MSTL has been closing under the 50-week moving average for quite some time. So that's another bearish catalyst we could not ignore. So basically what I'm saying is that we are seeing a little bit of both. It's very difficult to, I would say, draw a conclusion, but when it comes to the Bitcoin 50-week moving average, that indicator has never failed us. So I am sticking to that in terms of TA. And right now, like when it's not broken, there's no reason to fix it. So that's for TA. Let's also hop onto the on-chain analysis just so we could have more comprehensive update for the market. So the first thing we're going to look, of course, the short-term holder MVRV Bollinger Bands. We have covered that before as well. So it's a tool to see if Bitcoin is too hot or too cold in the short term. It looks at people who bought Bitcoin within the last 5 months. Then it compares the current price of the coins to the price they paid. On top of that, it adds the Bollinger Bands. So you see the bands, looks like a cloud, right? Think of them like a guide rails to show when the market is stretched too high or too low. When the line goes near the band, so here's the top band, it means short-term holders are sitting on massive profits. The market might be overheated. However, when it drops to the bottom band, it means many reason buyers are underwater, so the market might be oversold. So what's happening here, what's happening right now is that Bitcoin got rejected at the heated zone. So the orange dotted line right here is the heated zone. So Bitcoin got rejected there, fell 16,000 down to the oversold zone. After that, it bounced back, but it couldn't break through the middle line. Now it's back near the oversold zone. That tells us buyers and sellers are still fighting. Here's the key. So the short-term holder cost basis, the average buy price for new investors. Right now, Bitcoin is still below that. The bulls want to push the price above it and turn it into support. If they succeed, it could mark a real term. If not, we're going to see more weakness. So that's for one metric. The thing I want to bring it to you guys is the short-term holder cost basis change. Again, we touch upon this on Roxom TV quite a few times. It's like the average buy price for people who bought Bitcoin in the last 5 months. Traders split investors into two groups. So the short term, basically less than 155 days, and the long term, more than 155 days. This level is because it shows the mood of short term investors. When Bitcoin's price is above this line, so above this pink line we are seeing here, it often acts like support in bull runs, meaning buyers defend that line. Price is below, it acts as like resistance in bear market. So right now it's sitting at 113k. Again, like this price also with the TA we were doing just a few minutes ago. So I love how everything is coming together. Okay, the short holder cost basis is around this level. Bitcoin recently bounced back to 111k, basically yesterday when people were saying, okay, it looks good for the bulls, but it still needs to push price above 113k and really keep it there, remain there. If that happens, it will show strength and increase the chance of new highs. But if Bitcoin got rejected at this level again, it would be a warning sign. That would mean sellers have more power than buyers. The short-term momentum could flip bearish. For now, all eyes on 113k from on-chain and also from TA. Let's also move on to the next indicator I've prepared for you guys. So it's a Bitcoin Cycle Extreme Oscillators. So this is like the big picture for Bitcoin. Like instead of looking at just one chart, it combines 8 signals, things like profit, spending patterns, mining health, risk levels, and even future market data. When 4 out of 8 signals show the market is getting heated, it flashes as basically. When 6 out of 8 are hot, it flashes overheated. That usually happens near the top of the bull run. The same works the other way around. So if signals get cold, it shows us when the market might be oversold at the bottom of a bear market. So what's happening right now is that, okay, back in March 2024, Bitcoin briefly hit the warm level when it reached local top, but since then, no new like warm or overheated signals have appeared, even though Bitcoin have other rallies, right? What this tells us is basically 2 things. Either this bull run is much more calmer than the past ones, or the final push up hasn't happened yet. Right now, Bitcoin is around 108k, just below the short-term holder cost basis. Bears say the cycle is over, but the data does not fully justify that. Many metrics, like including these oscillators, show that the long-term trend is still healthy. The big takeaway I would say is as long as Bitcoin reclaims 113k, both from an on-chain perspective and a TA perspective, and actually flip that into support, the chances of another major leg up remain stronger than the chances of a true bear market starting right now. All right, so as you guys, we're going to take a little ad break. We just look at the TA and also on-chain. But right after the break, we're going to look at some news analysis, what's happening around the world, some geopolitics. So thank you guys. I'm going to see you in 3 minutes.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
All right, guys, welcome back. As I promised you, we're going to get some news analysis right now. So what's going on in the world? Of course, we're going to bring you are getting in, so we can't ignore what's going on in the world. So first thing first, we're going to look at China. So what China is doing. So China's economy grows at the slowest pace in the year amid US trade war. So China's economy grew about like 8% in July to September quarter this year. The slowdown actually comes from weak domestic demand, a long-running property slump, and rising trade tensions between US and also in Europe as well. While China has strengths in AI and rare earths, that's for sure, those sectors are not strong enough to cover deeper problems like too much debt or too much factory output or consumer confidence. Household incomes are rising on paper, but people are still saving so much instead of spending, which means they don't feel secure about their jobs or future growth in China. The government is offering targeted stimulus such as loans, subsidies, and infrastructure spending, but is avoiding the kind of huge stimulus being seen back in 2008. So the key question is, can those smaller measures stabilize growth, or will China keep sliding down? Right now, okay, there are factors why the growth in China is slowing down. First is the weak spending. We could see the retail sales, okay, grew only by 3% from the year before. All right, so this is actually, well, one of the reasons why I'll say China, the economy is not doing so well. And another issue is the prolonged property crisis. Okay, like seeing many news in China. So basically what we call is ghost town. There are many properties that are basically empty. No one lived there. There are many of properties like this in China. So we are calling this like property crisis. The real estate sector is really down and dragging the entire economy down. So that's factor number 2. Factor number 3 is, of course, the trade tension with the US and also between EU. So if you look at China exports by country, the biggest one is still US. So 526 billion US dollars export to US. Second one is, of course, Hong Kong. So 291 billion to China. So these are the countries. If you guys are interested, here's the list. So trade tension between US and EU and China, the tariffs are rising. While exports grew 6.1% in the first 7 months of 2025, risk from tariffs and weak global demand still remain. And then number 4, there's a bigger issue is that there's like a structural imbalance. What happened in China is that they are overproducing. The factories in China, they are producing a lot of goods, but there isn't enough buyers in China locally. It's basically opposite case of the US. And on top of that, there is local government debt and slowing credit growth are also holding the economy back. But I mean, China still has basically all the major cards, I would say, because when it comes to AI, there are only 2 countries. We have US and China. That's it. Like the rest of the world, they have a lot of catching up to do when it comes to AI for sure. And the target for China is that by 2030, China wants AI integrated into 90% of the entire economy, because we know AI can help boost GDP very significantly due to an increase in productivity and new business models. And the second major card China has is rare earths. China controls 70% of mining, 90% of refining, and 93% of magnet production. So those are, again, vital for tax, for EVs, for defense. And Beijing has restricted exports starting from December 2025. Let's see how the talk goes with the US, but I will say China has the card. And interesting side note that China is also holding many gold, tons of gold. We are seeing like 2,000, so 2,300,000 tons of gold. 300 tons of gold, sorry. Is at a record level as a hedge against the US dollars, because you know China's being one of the BRICS countries, they are doing the dollarization. But interesting fact is that actually Chinese people, they have a lot of money. Look at the disposable income. There is like an uptick. There's a growth in terms of the disposable income from the Chinese household. They're not willing to spend it, because why so? They are really scared, and also they are experiencing some deflation issues. So they much rather to hold on to that cash. Again, it's very different. I mean, it's a very opposite mindset compared to the West, compared to US particularly. And the government, they do have some response to this. Like we have, China's central bank launches 10-point plan to stabilize markets. So they have monetary policy where the central bank hasn't cut rates for 5 months, but is injecting liquidity every week to support banks and property. They also have fiscal policy, so 500 billion renminbi in targeted support, infrastructure projects, consumer subsidies, and social transfers. They have extra support for EVs, AI for sure, and low economy like drones, expected to reach 1.5 trillion renminbi by 2025. So that's one thing China is building. And I'll say the bottom line is China's 2025 economy is a half full glass. I would say China is in a much better position compared to Europe. Maybe not as strong as US, but it's getting very close. It's still growing faster than most developed economies, developed countries, but the growth model is shifting. If reforms work, China could stay strong in global trade. Like if not isolation. All right, so that's what's happening in China. And other metric that, okay, we're moving on to the next news. And other strategy that the US is doing to basically retaliate at China is, of course, rare earth. Because China has all the cards. China is really strong with military, when it comes to AI, when it comes to rare earth export. So what the US did in returns, basically just like a few hours ago, the US and Australia signed a historic rare earth, so $8.5 billion rare earth and critical minerals agreement. The goal is to secure supply chains and cut reliance on China, of course, which currently controls 70% of mining and 90% of refining. And again, magnet production globally accounted to 93%. This still comes during the rising trade tension. So China announced new export restriction starting exactly on 1st of December, targeting rare earth exports to the US. In response, because Donald Trump was so mad, and of course we know what happened last Friday. We have 100% tariffs on Chinese imports starting on 1st of November. But it looks like it's just Xi Jinping and Donald Trump having some argument again. Let's see if they're gonna make up to each other. So why does rare earth? What the hell is rare earth? This is rare earth. This is what it looks like. Yeah, thank you, Jamie. It's providing so much context. But basically, rare earths, or we call it rare earth elements, 17 critical metals used in almost every single thing. So EV batteries, smartphones, AI chips, basically electronics. Although they are not geologically rare, they are hard to mine and cleanly process. China dominates because of laws and high pollution production, which drove as competitors out of business years ago. Global demand for REITs is expected to even triple by 2030, mainly due to green tech. So deals between US and Australia, it was signed at the White House just a few hours ago. US gonna invest $8.5 billion for mining, processing, and refining projects. By 2030, they could cover maybe 20 or 30% of US needs, especially for defense and tech. Short-term wise, this is not going to do much. Like short-term, someone would get benefit. For example, the Australian mining companies, like the rare earth liners, how do you pronounce it? Liners. Okay, basically, this company, after this deal, was pumping a little bit, like 5 to 15% after the announcement. So this is the short-term impact. Long-term wise, like building stuff like this, it takes time, right? It takes like 5 to 10 years to actually be good at this. So yeah, I mean, long-term wise, I'll say China still has the card. All eyes are on the tariffs tension. So how it goes with Trump and Xi Jinping. We're gonna, of course, we're gonna update you guys. So I would say this is more a strategic step toward independence, but in the short term, yeah, I mean, looks like China. It's very difficult to replace China at the moment. Of course, we're gonna bring updates to you guys when we see if there are more tariffs rising, more tension between the West and also in the East. Okay, let's quickly move to the Japanese market because we're running out of time. So the Japanese market, the Nikkei, they reach an all-time high. That's good news, right? This historical milestone comes as Japan enters a new era of political stability with Japan's first female prime minister. So the rally reflects the optimism in Japan's market, Japan's economy, boosted by a weak Japanese yen, and also corporate reforms and sign of global trade thaw. Compared to Europe's, because Europe is really slowing down, Japan stands out as a regional leader, I would say. But challenges, of course, remain. They have high debt, they have an aging population, one of the worst among the whole world, and they have slow domestic consumption. So Japan, I would say, is quite surprising. Is such a small country, but the GDP is sitting at number 4. That's pretty impressive, right? So the 4th largest economy among the whole world. They have 4.2 trillion GDP in 2025. The growth in terms of GDP is around 1.1%. The expected growth is modest, but again, it's stable. Inflation is sitting at 2.7%. I would say this is actually quite surprising for Japan, because Japan was experiencing stagnation for more than a decade. Unemployment rate for Japan is 2.6%. Exports are strong thanks to the weak Japanese yen. Because, I'm not sure if you guys know, I'm from Hong Kong. So the Hong Kong dollars actually pack with the US dollars. Me going to Japan, everything is basically 50% discount. So a lot of Hong Kong people go to Japan just for traveling, just for fun. So the good thing is the Japanese market a new all-time high. So the Tokyo Stock Exchange is one of the strongest, one of the biggest amount of the whole world. So of course, this Nikkei 225, it tracks the top 225 companies like Toyota, Sony, SoftBank, very similar to how Dow Jones work in the US. And you zoom all the way out, Japan actually peaked in 1989 or 1990, and that it actually this crash was basically they got wrecked by the American by the US, but that's another video. It's a very long story. But after that crash, they have been in stagflation for decades. So congratulations to Japan. Stocks 20.5% year to date, second only to Hong Kong's Hang Seng corporate governance reforms, including stock buybacks and high dividends are making shares more attractive. So why this rally happened for Japan? First, they have the political stability. There's a new government, right? And then second, of course, is the weaker Japanese yen, as I covered. And the third is global context. So China's GDP growth kind of supports Asian trade, and Europe is in a really weak position right now, especially compared to Asia, compared to China, and compared to Japan. So here, breaking past the old bubble pop is seen as a symbolic, like a very symbolic of Japan finally escaping its lost decades. So is it a good time to invest in right now? Of course, not financial advice. There are some bullish signs I'm seeing. So the corporate reforms, so more shareholder returns through dividends and return through buybacks. And valuations of Japanese stocks is relatively cheaper compared to US stocks. There's also macro tailwind. Wage growth about 3 to 4% is kind of lifting consumption, though it's not like directly helping a lot, while the Bank of Japan still supports liquidity. In terms of geopolitical stability compared to Europe, energy crisis, and US versus China trade battles, Japan looks relatively steady, I'll say. But of course, there's still risk like Japanese yen being so volatile, and they have natural disasters, so earthquakes. There are quite a lot of natural disasters in Japan. Also, high debt in government and aging population. But if you ask me, Japanese market compared to so I would say, okay, Europe gained about 1.5% in quarter 3, while the Japanese Nikkei saw 20%. Yeah, so Again, not financial advice. Japan benefits from exports and currency advantage. Europe faces fiscal limit, slow growth, and lingering energy challenges. So, yeah, the choice is you. The choice is you. Yeah. So last bit before we wrap, just very quickly, a quick update on the whole Ukraine situation, because we were talking about that a little bit yesterday. So Ukraine is preparing for possible peace talks with Russia. This after US President, so Donald Trump, decided not to give Ukraine the missiles they were asking for, instead urging diplomacy and a freeze along current battle lines. So Donald Trump met Zelensky on 17th of October, which was just a few days ago. The meeting was kind of tense, and Zelensky left Washington without the weapons he asked for. Donald Trump has since said openly that he never promised Ukraine would win and predicts a deal will come soon. So the next big step is a planned meeting between Donald Trump and also Putin in Budapest in about 2 weeks. So just to give you guys a little context, Ukraine wanted some from the US. So this is the missile. This is what it looks like, to strike deep into Russia and force real negotiations, basically. So Zelensky argued they were needed to defend power plants and cities from Russian missile attacks. Donald Trump first hinted he might provide them as leverage against Putin, but after direct talks with both Putin and Zelensky, backed away, saying the US needs the missiles for their own use as well. So this kind of showed Donald Trump's shift, less escalation and more push for talks. At the same time, Russia launched new strikes on Ukraine's energy grid, cutting power in several regions. So the urgency for Ukraine is rising. But without US long-range weapons, its bargaining power is looking really weak. So Donald Trump said it publicly, enough for the bloodshed, suggest freezing the war. It's time to freeze the war right now. Meanwhile, Russia claims progress in some of the regions, while Ukraine continues to push for other US weapons. So what we guess when it comes to Donald Trump's offer to cease fire is, what we're just guessing here. First of all, Ukraine giving up the occupied territories and security guarantees for Ukraine, possibly maybe some prisoner swaps and armed control talks with Russia. This is what we're guessing. Donald Trump's comment have shifted. So in September, he hinted Ukraine could win, but by October 20th, he said he never said that. I never said Ukraine would win. Critics call this undercutting Ukraine. Supporters say it's realism. So anyways, all eyes on the Budapest meeting. Ukraine and Donald Trump and Putin are expected to meet in early November. So until that happens, we're going to see if there's more updates to, of course, going to break news to you on Roxom TV and also on Gemjam Crypto. That's pretty much all I wanted to cover. I know we are running out of time and we have other shows lined up on Roxom TV as well. Just the last call to action, make sure to follow us on Twitter. So my personal Twitter is jamjamcrypto.io, and make sure to follow Roxom TV. So Roxom TV is more for the news updates. If you want to stay relevant in the world and know what's going on with the Bitcoin price action, here's where you go. So Roxom TV, and also make sure to follow Roxom, because as I mentioned in the beginning of the show, we brand new exchange just launched. Everything got BTC, so that's going to be interesting. So yeah, again, my show is Monday to Friday at 4 a.m. Eastern Time to 5 a.m. Eastern Time. And until then, I'm going to see you guys tomorrow. Thanks for watching.